Let's dive right into a wild week that truly tested both the AI trade and the Fed's patience.
Despite massive swings, the S&P 500 showed absolute resilience, flirting with a close right at 7,500.
Looking at the scoreboard, tech absolutely led the charge, while small caps pretty much just flatlined.
So what's the big macro story here? Sticky inflation definitely kept the Federal Reserve cautious on Wednesday.
They held rates steady, but get this, 3 dissenting voters actually pushed for a hike.
Chair Wars demanded a hard 2% inflation target, and that hawkish tone immediately crushed the relief rally.
Because of those lingering inflation fears, the 10-year Treasury yield surged to 4.75% by Friday.
And adding serious fuel to the fire, WTI crude oil spiked a staggering 21% this July.
The data proves they're in a bind. GDP is slowing down, but core inflation is still way too high.
Now, surprisingly, it was corporate earnings that completely dictated market leadership this week, despite those massive macro headwinds.
Early semiconductor weakness actually led to a major hedge fund totally liquidating its public AI portfolio.
But then, a wild divergence emerged. We basically saw a tale of two totally distinct tech realities.
Microsoft and Amazon delivered absolute blowout quarters, reigniting confidence in AI infrastructure and totally saving the indices. Meanwhile, Apple struggled, dropping over 7% Friday. Though, to be fair, investors mostly recognized it as a supply issue.
So the really crucial takeaway here is how this underlying tug-of-war drove some massive sector rotation.
Riding Amazon's massive surge, consumer discretionary dominated, while rate-sensitive utilities suffered the absolute steepest declines.
Communication services followed Alphabet higher, while staples and financials just managed to eke out some modest defensive gains. But here's the catch. Despite index gains, participation was incredibly narrow. Most individual stocks actually declined on Friday.
All right, so what's the practical takeaway? Let's figure out your strategy going into next week.
Sticky inflation means restrictive monetary policy is here to stay, leaving just a few mega caps carrying the whole market.
Which leaves us with one crucial question. Can a handful of tech giants actually sustain this rally against high yields?